Can you believe we are less than a week from Thanksgiving and almost to Christmas? Time is flying so quick, and you know what is not flying? Interest rates. Interest rates aren't sinking. They're not going up a lot, but they're not moving much, and that's what we're going to talk about this week. We're going to talk a little bit about home prices and affordability. Yes, again, because that is a big word. We'll get into the big three real quick on this housing market update. Prices are steady. Inventory is steady. Rates are down. Not a lot, though. And here's kind of some of the headlines we're looking at. Home builders, got a home builder report. They're feeling better, but not great. September jobs market, we got the September jobs report a month late. We're not going to do the October one. And you know what? There was a surprise to the upside, but was it really an upside report? Existing home sales, October, they were up better than expected. And here's a question. Is the Fed making a mistake? A lot of churn right now with the Fed, and we're going to get into that. Do homes feel more expensive? I tell you what, I think they do, because you know what? They are. We're going to break that down a little bit. And then VA rates. VA rates drop below 6%. All right, let's get into some of the specifics here. We had a home builder report come out this week. The home builder sentiment improves. Confidence was up in November from 37 to 38, which is great. We want to see it. Now, it's still below the threshold of 50. 50 is and above, the builders are feeling positive. They ain't positive right now, but this is surprising that the number actually went up, considering we've been in a government shutdown for much of the month, October and November. And you know what? We're up across the board with the exception of future sales, but future sales are still above 50, and this is the second month in a row that future sales were positive. The expectation was positive for future sales expectations. We saw buyer traffic go up slightly, and current expectations up from 39 to 41. So again, moving in the right direction for builders. We'll see what happens next month, but home builders are moving in the right direction. I will tell you this, home builders across the country are lowering prices. I've seen that in the headlines here, there, and everywhere, and even on Oahu. They're giving some great deals on some of the new builds. So, hey, you know what? If you're looking to buy a new build, that might be the right answer for you. I'm all about quality, though. You got to make sure those homes are built well. There's a lot of great homes on island. There's some good builders. There's some builders I don't think I would necessarily trust. So, in any case, that's what we got for home builders. Sentiment is up. And we had the BLS jobs report. This was a jobs report that we were supposed to get in October, but we got it this week. And September beat expectations. We had 119,000 new jobs versus a 50,000 that was expected. However, when we go back, because there's always revisions to the two previous months, July and August were revised down 33,000. And if you look at the bars, two of the last 4 months were negative for BLS, which is kind of aligned with the ADP, which is like 3 of the last 5 months were negative. So unemployment, look at this. This unemployment line is going up, all right? 4th month in a row of an increase in the unemployment rate at 4.4%. And let me tell you, we were this close to 4.5%, all right? We're at 4.44. If we're at 4.45, unemployment rate would have been at 4.5%. So here's the other thing, too. The September report does not take into account the 200 or so thousand government workers who took that early retirement and are going off the books. September was their last month. Their loss is not included in the September jobs report, and we're not going to see it in the October jobs report either, because we're not getting the October jobs report. So this report, while I think it's a good report, it shows that unemployment is going up, the number of new jobs reported, and the numbers are skewed, folks. They are absolutely skewed. I don't think they're accurate, but those numbers, that 119,000, that number there is going to give pause to the Fed on lowering the Fed funds rate in December. At this point, it is not likely, based on this report, that the Fed will lower the Fed funds rate. I will tell you this, so average hourly earnings were stagnant, up only 0.02% or 0.2%. Not a lot of movement there, but still not enough. Even with unemployment going from 4.3 to 4.4, almost 4.5, for the Fed to make the decision to cut the Fed funds rate. We need some more economic news, and who knows what we get. I don't know, but that's something to be seen. All right, existing home sales. Existing home sales, these are the sales not of new home sales, but of homes that are already in existence, hence the name. Up 1.2%. This is the second positive month in a row with an increase. Annualized pace actually increased from 4.05 to 4.1 million. That's a slight increase. It's still below the normal and the needed range of 5 to 5.5 million. Actually, the National Association of Realtors just came out and said they expect to see a 56,000 increase in existing home sales next year, up to 4.5, 4.6 million. Still not where we need, but a move in the right direction. The expectation is that interest rates will drop. Conventional will drop to 6%, maybe even into the high fives. Median price stayed the same, 415,000. We have a days on market increase, but inventory dips just a little bit. Not a lot of movement there, but still we have more than an 11% increase in inventory from this year to last year, from last year to this year. All cash buyers up a little bit. First time home buyers up from 30% to 32%. So that's good to see. And we could see a stronger month in next month's existing home sales. Why? Because interest rates were lower in October, and those are the people who will be closing in November. So a good report overall. It just shows that people do want to buy. Again, the affordability is the big question and thing that is holding people back.
Everyone keeps asking me, when will the Fed cut rates? I don't know. But here's a bigger, scarier question. Are we heading into a Fed policy mistake? The Fed has been walking a tightrope trying to kill inflation without killing the economy. But when policy stays restricted for too long, it doesn't just slow the economy, it risks sending us into a slowdown nobody asked for. Buyers, sellers, and even lenders could feel the tension. Rates aren't dropping, data is mixed, and confidence feels fragile. People don't plan when the market feels unstable, they wait, and waiting is the enemy of affordability. Some signs we may be approaching a policy mistake. Inflation is cooling faster than policy is. When inflation is coming down but the Fed keeps policy tight, you have a lag effect. The economy keeps slowing even after the Fed decides to stop tightening. By the time they react, it's often too late. Labor market cracks are forming. Unemployment doesn't spike in a straight line. It rolls over quietly, then quickly. Job openings are down, hiring is slow, wage growth is cooling. These are early signs of tightening going too far. Consumer spending is slowing. The Fed's biggest fear isn't inflation, it's unemployment plus falling consumer confidence. Right now we're seeing cracks, weakening spending, rising credit card delinquencies, and buyers picking stability over risk. Housing is already in the pain zone for most families. The housing market is the economy. Higher rates have frozen people and pushed affordability to near 40-year lows nationwide. Housing weakens long before recessions show up. The data the Fed wants might not arrive in time. Powell wants a perfect set of data before he moves, but the perfect data might show up only after economic momentum has been lost. I'm not here to scare anyone, but to give you clarity. Because homebuyers shouldn't have to decode the Fed speeches to understand what's happening, and what's happening right now is a standoff between the Fed's patience and the economy's limits. So what does this mean for buyers and homeowners? If the Fed waits too long, rates stay higher than inflation, payments stay elevated, housing slows further, refinances get delayed, and uncertainty keeps buyers on the sidelines. This is why understanding trend direction matters more than the headline. Every week I hear someone say, "Larry, am I crazy or did homes just get way more expensive?" And I tell them, you're not crazy. Homes do feel more expensive, and there are real reasons why. Prices haven't just gone up. The entire experience of buying a home has changed. Payments are higher. Competition's weird. Inventory tight, and salaries haven't kept pace. And for first-time home buyers, it feels like you showed up to a marathon and everyone else has already started at mile 18. Why homes feel more expensive right now? Higher rates equals higher payments. Even if prices were flat, higher rates alone make a home feel out of reach. A $700,000 home today is a very different monthly payment than it was when rates were 3%. And wages didn't keep up. Home prices sprinted up for 10 years. Wages, job, maybe even walk. They definitely didn't sprint. Investors are still active. Matter of fact, nearly 1/3 of recent purchases were investor driven. Cash don't care about interest rates, and that pushes first-time buyers to the back of the line. And low inventory is a brick wall. Most homeowners are locked into a 2 to 4% mortgage, and they don't want to trade that for a 6 to 7% one. So they stay put. Less movement equals fewer opportunities. And entry-level homes have basically disappeared. Builders don't build starter homes, they build profitable homes. And starter homes simply aren't as profitable. I get it. I work with buyers every day who are saving, budgeting, and doing everything right. And it still feels like the finish line keeps moving. But the good news, you still have options. And the buyers who win are the ones who understand how the market really works. If you want to know what you can actually afford, not what the internet calculator says, let's run a real scenario for you.
Then the VA rates. VA rates just on Thursday, they just went below 6% at 5.99%. So hey, not a big movement, folks. Nothing to get too excited about, but anytime you get your rates, down another notch below that 6% range, that's good. I think a lot of it had to do with the unemployment rate going up. Also, just the stock market getting hammered today. Not even pretty at all. So people are taking their money out of stocks. They're putting in something more safe, such as bonds and treasuries. So that's where we see interest rates coming down just a little bit today. We'll see what happens over the course of the next couple of weeks. And with a lot of the turmoil going on with government, with interest rates really staying up, not really coming down enough, mortgage apps were down last week for both purchases and refinances. I tell you what, with the inventory, there's brokers opens around the island where on Wednesday. So a lot of realtors are really trying to sell their homes. I had a pitch event with a lot of realtors there, and man, they got multiple homes on the market right now. They're having a hard time selling them, and they're offering really good incentives for buyers to get into those homes. And ARM rates just locked another person at 4.75% on a 5-year ARM. That's a great rate. That is where rates should be for affordability. And we're able to do that because sellers are giving concessions. They're giving concessions to not only bring the rate down, but also to pay your closing costs. So a really, really good deal right now. Good deals abound for buyers. Sellers, hey, you know what? If you don't have to put your home on the market right now, I wouldn't. I would hold on until the springtime. Interest rates expectation. Again, I told you the National Association of Realtors thinks that interest rates will be down. I do too. And when you get more people moving at the end of the school year, you're going to see a lot more action, and your home won't be on the market as long. It'll go quicker, especially if you have the right realtor to help you price the home correctly, incentivize correctly, and get your home off the market. I work with some of the best realtors on the island, and let me tell you, they are moving homes quicker than most because they are setting their sellers up for success right from the start, whether it's staging, whether it's the pictures, whether it's really just pricing it right and marketing it right. Those realtors are standing out right now in a market that is stagnant really across the board.